everyone. My name is John Coleman. I've been a mortgage broker for over 16 years at this point. And a question I often get asked at the beginning of someone's mortgage journey or the journey to getting their home is, which bank offers the best interest rates? Now, if the answer was that simple, I probably wouldn't be in a job, but there isn't a definite answer here. A lot will depend on personal preference, personal circumstance. With regard to personal preference, well, someone may prefer to take fixed rates or someone may prefer to take variable rates. Obviously, a quick summary of the difference: fixed rates, for whatever period of time you may fix it, that's, you know exactly what you're going to repay in that period of time. With variable rate, your rates can go up or go down depending on what's happening in the market. So again, a lot will depend on your own personal preference there. Previously, I would have recommended variable, but currently I'd be recommending fixed rates. But again, each person's circumstances will dictate that. Obviously, then your circumstances are important because the amount that you're looking to borrow may not be available with all the banks. So you may be able to only go with one bank, and then you are basically going to have to make a choice with their suite of rates. Again, you're going to go then back to personal preference, whether it be fixed or variable rates. Next thing that you may be thinking about or considering is going with a bank that offers cashback versus a bank that doesn't. The banks that offer cashback tend to have higher rates. So if you're taking a long-term view on your mortgage, which a mortgage is, then cashback does not make sense. But if you're actually going to take a short-term view, as in, okay, I'll take cash back and maybe move my mortgage after 3 years, well, then it can make sense. But there are subject to risks. It's subject to you being able to move your mortgage, subject to there not being a property crash. So cashback can make sense, but it definitely needs to be done with your eyes wide open. For me, the most important factor about interest rates it's not the interest rate, it's what's the total interest that I'm going to end up paying, okay? For me, this is based on how quickly can you pay your mortgage back. The level of interest that you pay ultimately will reduce absolutely, really, really significantly the quicker you can pay your mortgage back. Some banks, again, will allow you make overpayments on your mortgage if you've taken a fixed rate, which is great. It combines flexibility with the ability to overpay your mortgage and ultimately reduce the term and total interest that you end up paying. But in real terms, as I said at the very beginning, there's no one definite answer. My role in all of this really is to show you how to pay the least amount of interest on the mortgage that you will need to take out to buy your home. For more information on how to reduce the total interest, you can contact me on my contact details are below. And thank you for listening.